The Treasury Secretary and the consumer is forcing Jerome Powell and the Fed to look at the rate cuts and potentially do an emergency rate cut. But I'm going to show you why Jerome Powell is resistant of all of that, even though we have people like the Treasury Secretary breathing down Jerome Powell's neck saying, hey, you need to cut interest rates ASAP like Rocky. Now let's get into the reasonings why Scott Bessent has said that the Fed needs to cut interest rates. A big reason is because of this bad boy right here, the 2-year yield. Look at the Treasury yields. Scott Bessent is yelling from the rooftops. We've seen a low that we haven't seen in almost years now, and it's plummeting on down. So look at these and see why, right? The Fed's funds rate, 2-year rates are now below the Fed's funds rate. So that's basically a market signal that the Fed should be cutting. The Fed's fund rate is the benchmark interest rate, obviously many of you know here, and the overnight rate that influences rates levels on all bond maturities from 3 months to 10 years. The Fed's policy rate is currently 4.25 to 4.5. The yield is now 3.75 as of Thursday. So the Fed is going to be resistant to this and is very resistant. You guys know and love that I love to show you this probability chart here to show you guys just how likely the Fed cut is going to be. Newsflash, it's only 1.3% as of right now, and that's coming in 5 days here. So that's coming very soon. It's on Wednesday. So even though we are seeing the bond yields drop dramatically and the Fed and Scott Bessent yell at the Fed that we need to cut, there's a lot of differences going on here. And I'm going to dive into why the economy is showing that we potentially need to cut rates and cut them very soon as well. So we're seeing that he has a guy in the Fed he's not a huge fan of, calling Donald Trump. We should have interest rates go down and be positive. So the President of the United States, the Treasury Secretary, and many others are calling for this. They're calling for an emergency rate cut. We have this meeting on Wednesday of next week coming along, and I'm sure I'll be covering it all with you guys here. So subscribe and hit that bell notification so you guys are ready for when I'm covering these things live. But as they wrote, there's been growing signs of stress in the bond market. It's hard to say whether the swap spread or the basis trade getting liquidated is the biggest contributor, but the Treasury markets are unusually and unnervingly turbulent. And this wasn't written too long ago. This was earlier in April. The pixel time of the 10-year Treasury climbed to 4.35%. So there's a lot of issues in the Treasury markets as we are seeing them going forward. But there's even bigger issues when you look at the consumer, who is essentially the tall tale sign of what is going on Main Street, right? So we're seeing now McDonald's suffer their worst. I don't know where that noise is, but we're seeing the U.S. McDonald's see the worst sales decline since 2020, and they've warned of an anti-American sentiment abroad. They're saying that, oh, these McDonald's eaters are looking at this and saying, hey, we hate the tariffs, so we're not going to go get a Big Mac. Look, I find that very, very hard to believe that the average McDonald's consumer really does believe that there's going to be or the average McDonald's consumer is thinking about the tariffs and saying, hey, we're not going to eat McDonald's because of Donald Trump. I mean, that just seems outrageous. Usually the McDonald's are people looking to save some money here or there. But McDonald's has reported its worst quarterly sales for the U.S. since the height of the pandemic in 2020. Look, worst quarterly sales in the U.S. They're already trying to say that there's an anti-American sentiment abroad. I mean, you're looking at these earnings and they're saying this. So these headlines that they're reporting in the mainstream media are simply there to scare you, folks. I mean, look at that. Like, the fear mongering is absolutely insane. They're going to tell you that the tariffs are making the prices of the Big Mac, the dollar menu, need to go to the $1.50 menu. It's absolutely insane. So remember, just use a little bit of logic. But the burger giant reported same store sales fell 3.6%, the largest 3-month drop since they plunged 8.7%. And the forecasters saw a decline, but they only predicted a 1.7. So that's nearly 2% off, which is extremely large comparatively when you're looking at it as 1.7. So they're saying consumers are grappling with the uncertainty. And there's the higher income traffic, meanwhile, remains stable. People are just visiting less. So there's two ways we could really take this. The American consumer is either, eating healthier potentially, right? But that would be something that would take gradual over time. Or on the flip side of things, there is growing consumer confidence declining, right? Like, people are afraid of losing their jobs. We've gone over this in a previous live stream where consumer confidence is at a 15-year low that we're seeing right now. So I tend to believe it's that, where people think that they are potentially going to lose their jobs. Because they're potentially going to lose their jobs, they're worried about that. They're hoarding everything. They're, keeping everything close to the vest. They're trying to save as much money as they possibly can. And we've seen it with the mid-level people as well, right? I've gone over this in a previous live stream. Chipotle is also seeing comparable sales drop year over year. And they're saying it's a recession fear in restaurants, right? We've seen this with the airlines as well, saying that the airlines are seeing a potential for a recession. But the earnings growth and the recession fears due to threat and discourage customers for eating at these restaurants for the first time in ages, right? But we've also talked a little bit about Walmart. Walmart's an interesting one because Walmart is also has the narrative that everything is going to be just a bit cheaper when you go shop at Walmart comparatively to other places. So when you're going to Walmart and you keep seeing, these things and the price is cut, you think everything's actually not going super well. But what Walmart's doing that is very interesting is they're saying, hey, we're giving manager discounts now. We're giving discounts that are extremely low. They're looking at competitors and giving you the exact same or maybe just slightly less than what the competition is giving. And so I think we need to watch what Walmart's earnings are saying, because of what Walmart is essentially doing is unique comparatively to everywhere else. Everywhere else, you seemingly see the prices go up. You see the oil changes go up to $75. You're not going to see them go down to $50 again. But Walmart's doing it differently. Walmart is lowering those prices. And it's interesting too, because we're seeing now oil and gas prices go down. So even though we are seeing, some outward pressure for various goods and services now increase prices, we're seeing oil get down. Now, what did Donald Trump really bang the drum on when he wanted to, or when he was coming in? He said, we're going to really focus on energy and bringing manufacturing back to the United States. The first thing was, we're going to put these tariffs on all of these foreign countries. And now everybody is saying that, these recession fears are because of tariffs. They're saying the average McDonald's worker a McDonald's consumer is worried about the tariffs. That's why they're not buying Big Macs, which I think is just absolutely insane. It's, it looks like they're using these tariffs as a scapegoat. And as many of you know, if we cut interest rates now, we're not going to see the effects of those policies until down the line. Same thing when we hiked interest rates. When you see these policies go into effect, you're not seeing the aftermath of these effects and changes and things like that until much, much later. So in reality, these tariffs, we haven't even really seen the effects of what is to come of these just yet. We're seeing the potential and the market fears. That's why we're seeing the S&P 500 not perform quite as well. And what else did Donald Trump say? We're going to drill, baby, drill. And so now we're seeing oil prices down over the last 6 months. Despite the summer travel surge, we're seeing oil prices come on down. So, what does this mean for gas prices? Oil prices are at their lowest level since the spring of 21. So, throughout the all last presidency, we're seeing oil prices get on down, but gas prices have slightly risen since January. And they still are 50 cents lower than they were a year ago. As Donald Trump crosses his 100-day threshold into his second term, gas prices remain at the core of his promise to reduce energy prices. So I think that, these gas prices are going to start to come down, and we're going to start to see goods and services prices come on down as well. And that's just kind of par for the course, right? We're gonna potentially start to see some of these things shrink and come down, and that's going to be the reality of the situation. But the EIA expects that gas prices to ease as the year goes on. The U.S. retail price for regular grade gasoline averages about $3.10 a gallon in our forecast for this summer, and about 20% less than their forecast in March of last year. So the lower gasoline prices will obviously help with transportation and all of these other aspects that come with it, right? But still, it's interesting that we will see, honestly, we won't see a rate cut coming in. It seems like the market would be absolutely shocked if Jerome Powell and the Fed cuts interest rates on Wednesday. And we're seeing the Dixie kind of react in a unique way, right? We're still seeing the worst start to the Dixie of the year since they started tracking it, right? Yesterday we saw the Dixie finally get over that 100 mark, and now we're seeing it plummet coming into the weekend here early in this day, down 0.65%, which, like you guys in the chat know, when you see Tesla, Nvidia, all these things down 0.6%, you're not sweating it. But when you look at the Dixie, it's the relative strength of the dollar. You don't want to see 0.5% or more movements in that, because that shows for extreme volatility in what we are seeing. But it's interesting because the market's reacting in the opposite direction. Although we're seeing the Dixie down today, we're seeing the overall S&P 500 open up 1.2%. So, that's a pretty solid start to the day of what we've got here for the overall market. And we've got McLovin in the chat. What's going on, boss? Great to see you here, as always, on this early morning rise and grind, where we're talking all about the consumer and what Scott Bessent said here. Right? So let's not forget, he is really pushing for Jerome Powell to cut interest rates. Him and Trump are going at his neck saying, cut him, cut him, cut him. I will force Jerome Powell out if, he doesn't do what I say, basically is the preface of what Trump has said to Powell. But hey, you know what? Trump once again has said, I have a Fed person who's really not doing a good job. They're coming at him, right? So who knows if it's a media ploy or what, but you're not supposed to criticize the Fed. You're supposed to let him do his own thing. But I know much more than he does about the interest rate. Believe me. I mean, Trump, when he says these things, are absolutely electric. So we're going to keep a close eye on the Treasury yields, because as Bessent, stated here, we are seeing the 2-year rates noted below the Fed's fund rate. So it's a market signal that they think the Fed should be cutting. So hopefully we will see that in the future. We're not going to see it on Wednesday. At least that's what I'm predicting and the CME group is predicting. So make sure to smoke the like, hit the subscribe button, tell a friend to tell a friend, and bring on a friend and make this chat more lively for McLovin here next time. Thank you guys all for joining. And McLovin, I always appreciate you coming on in to the chat.